Hello, everyone, and welcome to another edition of the Smart and Safe Small Business Podcast. I am Alex Oxford here with another fantastic Alex in the tax space, Alex Roytenberg. Thank you so much for joining us today to talk about a super exciting topic, multi-state income tax.
Thank you for the invitation, Alex.
So, at a high level, Alex, tell me, who do you work with and what does your business do?
We work with a lot of early stage and startup companies, helping them navigate the complex world of the US tax code.
Fantastic. So, talk to me about multi-state income tax. At a very high level, what is it and why should businesses be paying attention to it now?
So, the biggest reason multi state tax has become a hot topic as well as a complex world is as a result of the 2018 Wayfair decision, which is a Supreme Court case that changed the requirements and obligations of a company's filing and collection of taxes. Prior to 2018, if you weren't physically in a state, you didn't need to worry about taxes in those states. Now, as a result of the Wayfair decision, if you have enough business activity in a particular state, you are now required to collect and pay income taxes as well as sales tax. It's called economic nexus. And that has turned the complexity and filing and compliance requirements completely upside down for a lot of companies.
So, help me understand because I'm sure a lot of business owners are putting their head in the sand, trying to be blissfully ignorant of all of the rules that are out there. What happens if a business is ignoring this? How big of a deal could this be?
So this could end up coming back to a business on multiple factors. On the business income tax side of things, the states can come back with penalties and interest as high as 25 to 50%. On the sales tax side of things, as you're aware of this, the companies will be fully liable for the sales taxes, that even if they did not collect them, the states still want their money. As a result of COVID, I think the aggressiveness that a lot of states will be with regards to making sure that people are compliant on this is going to go through the roof because states are just purely cash strapped and looking for additional revenue. So I think that's where that's the driver behind this is um, possibilities of fines and penalties, which would be the responsibility of the executives within the companies.
Absolutely. So we have some new laws, right, that are creating new obligations for businesses that might not have had to pay income tax outside of their home state, combined with states just frankly going broke because they don't have any money. And I think when we combine these two things, it creates a dangerous combination where I think we're unfortunately going to see a lot more audits, both on the sales tax side and the income tax side over the next few years, particularly in 2021. So when is the right time for a business to begin thinking about if they have obligations outside of their home state and to really begin taking this seriously? When are the liabilities material, generally speaking?
So the easiest driver which would trigger a company to have to file in a state is if you start to have a remote team member working in that state, or you start to get a warehouse for distributions or storage of your goods. The other one is when you start to have revenue in a particular state of usually over $100,000. We start to see companies with revenues over $4 million or $5 million is they're starting the tipping point when they start to trigger those thresholds in additional states. The usual culprits to triggering those thresholds are usually the big states, New York, California, Texas, Florida, Illinois. And then we'll start to see some of the states around it, whether it's Connecticut, New Jersey, around New York, Massachusetts sometimes starts to click those states. And so those are usually the big target states that we see companies needing to have compliance there. And then the rest of the country, once revenues are usually over $10 million.
And so this isn't necessarily an additional tax, right? Because we're really just reallocating the revenue from the business's home state to the other state. Is that correct?
That is correct. That's the one of the biggest misconceptions. You don't end up usually, as long as you're structured correctly from a tax side of things, you don't usually end up having to pay state taxes on the same profit in multiple states. The biggest driver behind this is what's called apportionment. So if you have 10% of your sales in the state of California, 5% of sales going on in the state of New York, you'll pay 10% of your overall profit to the state of California, 5% of your overall profit to the state of New York. And that's the analysis that we go through to make sure that companies do their appropriate planning as well as their appropriate payments.
And apportionment is very complicated. I can tell you as a remote business, we have employees in many, many states, and we go through this process every year, and it is not clear cut. You definitely need an expert who knows what they're doing. And Alex has a wealth of experience. Big accounting firms. Where were you working before you started this practice, Alex?
So my history is about 5 years at Morgan Stanley, 4 years at Goldman Sachs, 3 years at PwC. Most recently, spent 3 years at a global hedge fund where we managed roughly $42 billion. I specialized in state and local taxes across all 50 states at both Goldman and PwC. Um, so definitely a lot of experience specifically within the state and local world.
He knows what he's talking about, people. It's a good thing, especially in the tax space. So, for businesses out there who know they want to take action to protect themselves from a potentially costly income tax audit in an from an out of state, what is one action that they can do today that's free that will help them protect their business?
So the first thing you want to know is understand where you have physical or economic nexus. So the first thing you want to look at and identify all of the states where you have team members in. And then the second one you want to identify is any state where you have sales, gross sales over $100,000. Once you've identified those states or states that are getting close to the $100,000 mark, you'll then be able to figure out how big of an issue it is. And then we would be able to work with you and identify what the next steps would be to identify to resolve the problems. Some states also have what's called voluntary disclosure agreements, VDAs. I believe they have these on the sales and use side of things. They also have these on the income tax side. Every so often, my guess is as a result of COVID and them wanting to bring in revenue, they're going to bring these up once again. Um, Basically, what they allow companies to do is to come forward and tell the states, hey, yes, we've been non-compliant. We'll pay taxes with no penalties with reduced interest rates. It's just a way for the states to start to collect income taxes and revenues into their coffers. So those are some of the things that we usually recommend for clients to first identify who your problem child states are, and then we can then help them figure out what the next steps are.
So, when it comes to how you can help, what can you do, and how can you eliminate this problem for e-commerce and software companies? Tell us more about what you do when it comes to multi-state income tax.
We work with clients to make sure that we identify on an ongoing basis the states that we like to bucket them into three categories. One, where compliance needs to happen right now. The second bucket is usually states that we need to watch and monitor. And then there's also going to be a bunch of states where you just don't have enough transactions or activity in, states that you basically will look at once a year. Once we have the states identified and categorization completed, we will then go through their books and records to review what the tax costs are, what systems we need to put into place to make sure compliance is possible to be done. And then we'll review this on a 3 to 6 month basis, depending on the size of the companies and the growth of their sales.
And so how can businesses get in contact with you if they're interested in learning more, getting pricing, or starting the process?
Best way to reach us is always through email. Tax@alexroytenberg.com is the best way to get in touch with us with regards to our tax services.
Very good. And we will have a link and a copy of that email address in this description of the video. So Alex, thank you so much for joining us today. Really appreciate it. Thanks for joining us from the beautiful Zoom Venice background. I love it.
Thank you very much, Alex. Thank you for the invitation once again.
Yep. See ya.
Have a good one.